Hi, so today I wanted to do a short video on what's going on in the marketplace right now. If any of you have been looking to invest as a syndicator in multifamily properties, you know what's going on with the cap rates. Cap rates are very low right now, which means that prices right now are very high. So we want to look for complexes that have a little meat on the bone, so to speak, value add, where we can make improvements, cut some cost, raise some rents, so that there's an appreciation to the property several years down the road, where when we decide to sell, our investors will have a great opportunity to participate in any of those profits, which is in addition to the regular cash flow that we anticipate. So right now it's been very difficult to find reasonable prices for multifamily units. And one of the things we have to be careful of right now is that the pricing, as interest rates go up and maybe the market cools off a little, those cap rates are not going to stay where they are. So even with some improvements, we have to be careful that our projected cap rate down the road is reasonable, and we're not looking at something where we think the cap rate is going to be even lower than what it is now. Not really feasible if we do things that way. The other thing is we're looking into building, and even that right now, because of the pandemic, is a bit difficult, and the reason being that prices of materials have gone way up, and also the ordering of these materials has been a tremendous backlog. So when you're looking at things like plywood running $60 to $70 a sheet, when you could get a really good piece of plywood not that long ago for a third of that price or less, you know what, it just does something to the price, to the cost of building. And again, you have to be very careful in what you're doing, because you may try to build a complex. By the time you're done, prices in the marketplace have changed, and now you've got a building that probably could be built for somewhat less than what you paid for it, which is now extending your capital expenditures and what you have to raise, where if you had waited a year or 2 years, it wouldn't have been so dramatic. Anyway, that's a very short video today. I wanted to talk to you a little bit about where things are in the marketplace and not get into too much detail with it right now, but it gives you some idea of some of the things that we're going through that we're being very careful about. We want to make sure that our investors are comfortable with what we're showing them. We want to make sure that our projections are solid, and we want the best for everybody in this. So we're not rushing into anything right now. We're constantly looking, constantly talking about the possibility of building, but until those numbers really work, where we feel comfortable in presenting that to an investor, we're standing pat. So thanks guys for listening, and I'll talk to you again soon. Have a good day.